I'm Danielle Hale, Chief Economist for Realtor.com, and here's what you need to know. An agreement to raise the debt ceiling limit was reached this week. But policy uncertainty remains, as the new limit is likely to be hit in early December, and infrastructure plan negotiations are ongoing. Data, however, are promising. For the first time since the pandemic began, jobless claims dipped below 300,000, a level generally viewed as healthy. We also saw more than 10 million job openings at the end of August, slightly below July's record 11 million. This ends a 5-month streak of new record highs, but job openings remain nearly 50% above pre-pandemic levels. This is generally good news for workers, and a record high 4 million quit this month, presumably for better opportunities. On the flip side, unfilled job openings are weighing down small business optimism, which slipped in September due to uncertainty, difficulty hiring, and rising compensation costs. Higher expected real sales and earnings trends weren't enough to offset the worries of a record high 51% of business owners who reported job openings they couldn't fill, and net 42% reporting compensation increases. Labor costs are rising as consumers grapple with higher prices. After easing in August, price gains picked up in September, rising most for food, energy, and new vehicles in the month. Compared to 1 year ago, prices for energy and used vehicles saw the biggest increases. With rising inflation and Fed minutes reaffirming that tapering is likely to begin before year-end, mortgage rates ticked up to the highest level since April. But data show that applications for home purchase mortgages also ticked up slightly in the week. In Realtor.com's weekly data, we see an ongoing tug-of-war between strong buyer demand from young households and the typical seasonal cooling. Inventory remains near 2021 highs, but improvements have stalled as new listings have lagged year-ago levels in 5 of the last 6 weeks. New seller activity is a key indicator of what buyers can expect in the weeks ahead. If recent declines continue, the risk of re-intensifying competition increases. But if we see more new sellers, buyers can expect better market balance ahead. New research from my colleague Jiayi Xu shows that despite a record high fire season over the last couple years, flexibility and the search for affordability have California shoppers increasingly interested in areas that also have higher fire risk. This is pushing up prices. The median home price in high-risk areas has grown at a rate 10.2 percentage points higher than the median home price in lower-risk areas. Find more details and our housing data for download at Realtor.com/research. And follow us on Twitter for real-time updates.